Facebook chief Mark Zuckerberg to fire 10% of Meta's 87,000 staff. Which, by the way, why does he need 87,000 employees? So he's going to do it this week in first mass layoffs in company's history. Analyst warns after profits slump and $80 billion wiped off value. So the Facebook founder 38 is planning large-scale job losses that could total around 8,700 employees after the company's profits slumped in nearly $80 billion, and it was wiped from their value. Analyst Gene Munster, a managing partner at Loop, which invests in Meta, said the staff cuts would be the largest by any of the big tech companies. Details of Meta's plans come after Twitter's new chief, Elon Musk, brutally released half of its staff, about 3,750 employees, becoming the latest tech firm to wield the axe. Meta, which owns Facebook, Instagram, and WhatsApp, has around 87,000 employees, so cuts of 10% would amount to more than double the headcount lost by Twitter. Munster said the layoffs are totally necessary, but he said Meta is actually likely to hire thousands more employees next year as it continues to throw resources at its struggling metaverse unit named Reality Labs. Munster told Squawk Box on CNBC, in this case he's probably going to cut. They haven't given the specific numbers, but about 10%, which would be the largest headcount of any of the big tech companies. Munster said Meta's decision was a step in the right direction. The company's stock was up more than 5% on Monday morning following news of the cuts, but is still a staggering 71.5% lower than at the beginning of 2022. That is so crazy. In some ways, I'm a little bit surprised to see the stock reaction given Zuckerberg talked about this on their earnings call a couple weeks ago, Munster added. Specifically, he said headcount would effectively remain flat a year from now. So what's essentially going on is they are reducing headcount by 10% and they will be adding headcount within the metaverse. I think when you put all this together, it's some welcome relief for Meta investors, he said. It's good that they are showing some fiscal responsibility, but still, the future of Meta is going to be largely dependent on the metaverse. What direction that moves in. Investors want to see headcount reducing in 2024, he said. It is not clear how Meta staff will be told who will be let go, but Zuckerberg is known for holding a company-wide calls to make important announcements. Twitter boss Elon Musk used brutal tactics to axe half of its staff, locking them out of their offices and laptops, then informing workers by email. And the strategy drew fierce criticism from both staff and observers, and Zuckerberg will likely want to avoid a similar backlash when he announces his cuts. Along with economic uncertainty in the near future, Meta's struggles have partly been down to the lukewarm reception of its flagship metaverse project. Meta has spent billions and hired thousands of employees around the world to build the metaverse, which refers to a shared digital environment that uses augmented or virtual reality technology to make it feel more realistic. But the company's dreams have fallen short as the Reality Labs unit, which works on augmented and virtual reality, has continuously reported staggering losses. It lost $5.8 billion in the first 6 months of the year. So, Zuckerberg has said it would take several years to realize the full potential of the metaverse. Meta Platforms Incorporated forecasts a weak holiday quarter and significantly more costs next year, wiping about $67 billion off Meta's stock market value, adding to the more than $500 billion in value already lost this year. The disappointing outlook comes as Meta is contending with slowing global economic growth, competition from TikTok, privacy changes from Apple, which honestly this is probably the biggest thing that hurt them, concerns about massive spending on the metaverse, and the ever-present threat of regulation. The impending layoffs were first reported in the Wall Street Journal. Zuckerberg said on the last earnings call in late October, in 2023, we're going to focus our investments on a small number of high priority growth areas. So that means some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. In aggregate, we expect to end 2023 as either roughly the same size or even a slightly smaller organization than we are today. So let's check out some of these comments. I wonder if all those young techies now regret Facebook's leftist bias now that left-wing policies have wrecked the economy. Go woke, grow broke. Let's see. There's absolutely no future in social networking via virtual reality. Most people experience some degree of motion sickness when trying it. There have already been several studies done on this aspect. The results were all pretty negative. Meta is on a rocky journey to oblivion. The thing is, virtual reality could work in basically one context from my perspective, right? Virtual reality could technically work not in necessarily like a full spectrum virtual reality situation, but augmented reality. And what I mean by this, let's say that you're able to wear like sunglasses or a pair of glasses that you could basically use like a computer, right? Or like a phone. So basically, like let's say that, but it automatically does it just because like of like maybe how you think of something or whatever, depending on how you set it up on your settings, right? So for example, let's say that you want to go pay for something. Maybe the glasses that you wear see that you're about to try to pay for something, and they pull up your different credit cards that you have stored up or your debit cards that you have stored up, and basically give you an option as to how you want to pay for this specific item, right? That's what I'm talking about. Like, I could see a real possibility in terms of augmented reality. Virtual reality will be very hard to really get into the hands of everyone because of one, the price. The price of like a decent virtual reality setup is very, very expensive, right? So you are basically canceling out a massive customer base. But if you maybe only made this thing as to like 50 bucks, 100 bucks, 500 bucks, maybe at most 1,000 or about that, basically the same price point as like a new iPhone or something or a new Samsung. Like that price point maybe could work, but only if it gets wide, like worldwide adoption, right? And it has to be something that either is like a wearable or something that they will basically use all day, every day, which most people would not be using any sort of virtual reality thing like that ever for a very, very, very long time, if ever.